In today's episode, my guest was Ben Fletcher. Ben is the founder and CEO of Mothership. He has over 20 years of experience in business, and what he's doing now with Mothership is they're buying existing profitable e-commerce brands, and then they're growing them under that one umbrella into bigger brands. And Ben, we had really fascinating conversation. I love what he's doing. I think it's really, really interesting. And we talked about how they acquire brands and how they grow them after they acquire them, right? How they optimize them. He talks a lot about incentives, how to align incentives across the company. We talked about leadership and performance, and Ben just brings an abundance of knowledge when it comes to business. So we dived into a bunch of different interesting conversations, and I hope you're going to enjoy it. And if you do, please like, subscribe, send me a message, leave a comment. I love to hear from you. Thanks. All right, Ben, welcome to the Founders Lounge.
Well, glad to be here. Thank you.
So, Ben, let's just start with, can you do a quick intro of who you are and what you do? And how do you usually introduce yourself?
Yeah. Do you want to sort of potted history, kind of how I got to where I am, or do you want to know just?
Yeah, we can. Yeah,
just
I'd love to hear a little bit of history because I know a little bit about it, and I think it's quite interesting. And I'm sure we're going to get back to it also in some other questions later on.
Yeah. The very brief history is I have started a number of businesses. This current business is my fifth business. I've also done a little bit of investing, and I think the key thing for me is when I came out of my first business, which I'd been doing for over 10 years, I just felt there were so many mistakes that I'd made that were avoidable. I mean, lots of things, you're doing something new, you don't know what's good, the right answer is, but a lot of the stuff is about how you manage people and how you how you kind of communicate and how you build a business. And I think a lot of the mistakes that, particularly as I started investing, I saw people were making the same mistakes again and again and again. And I thought, because they're avoidable, it'd be good to spend some time trying to help people avoid those obvious mistakes. So the thing that I've been doing for the last 5 years prior to the Mothership was a series of events for founders that were all about those kind of common mistakes people make and how you avoid them. So that's kind of where I came from. And then the Mothership was a really interesting opportunity. So what we're doing is we're buying small but profitable e-commerce businesses. Generally, they are they've got a very good quality product, but because of the scale they tend to be under optimized in terms of the marketing they do. So if I take a very extreme example, we acquired a business. It was making 100,000 of EBITDA. I mean, we're buying businesses a bit larger than that now, but it was making 100,000 EBITDA. It had one member of staff. He was the founder. So he was pretty good on Amazon, but he was no way as good at Amazon as our whole team of Amazon experts are. And he wasn't, he wouldn't have been very good at doing Google and Facebook and and even things like international expansion was harder for him. So the idea is we have these specialist teams that are experts in all those areas. We can buy one of these it has to have a good quality product because that's the kind of fundamental basis of it. You can't turn something into a new strong brand if the product isn't very good. It's not just a marketing machine, but it's got to be the good quality product. And then you layer on the kind of marketing optimizations to grow it faster than it would have done otherwise. So it's not a tech play in that we use a lot of technology, but the core product isn't the technology. The core product is our ability to execute the marketing and grow these companies faster.
This episode is sponsored by Freelancer.com, the largest online marketplace for freelancing and crowdsourcing. If you want to delegate some of your work or need to hire an expert to work on virtually anything with any skill, then this is the place for you. They've got over 60 million registered freelancers, so you can find pretty much anyone to do anything you want. Even NASA has been using it for years, and I've been using it recently to get some cool new stuff done for the podcast. So if you want to give it a try, go to freelancer.tflpod.co. and you'll get a £30 voucher to start with your first project. So that's freelancer.tflpod.co. I'll put the link in the description. So would you say that finding a good product or developing, I suppose, a good product or inventing a good product, that's the core parts there? Because I suppose that's one thing that you That's one problem that you solve for yourself, for your business, by acquiring somebody, right? By acquiring a business instead of starting a new brand from scratch.
Yeah, I think in the sort of tech world, people talk about product market fit. Well, the sort of businesses we're seeing, they've been through this kind of evolutionary process. So for every company that we look at, there will have been thousands that had different ideas, or even quite a similar idea, but just wasn't quite right, or wasn't quite the right time, or they just didn't get the early traction, or the product quality wasn't good enough, or there's a million and one reasons why they could have failed. So by the time they get to the stage we're acquiring them, which nowadays is typically kind of 500,000 to 1 million of EBITDA, they've already found that kind of product market fit, that we know the product is really good. We can see the quality of the product from the Amazon reviews, from Trustpilot. So we know the product is really good. We know that it's got a sufficiently large initial market because it's managed to reach this level of profitability. And then we can look at it and say, well, we can see from how they're operating that they, either they're doing Facebook, but we can see how well they're doing it by examining their account, or they're not doing it, and we can introduce it. We could look at TikTok, all these different channels, launching new products, launching new geographies, are all stuff that we have a really, we're building these specialist teams in logistics and finance and marketing, so we can, wherever they're under optimized, we can kind of improve those businesses and grow them more rapidly. And hopefully, as we're doing that, we increase the margin as well because we're more efficient as well.
Are these usually, so those are typically smaller businesses, usually founder-led businesses, I would assume?
Yeah, pretty much all of them, yeah.
And so I guess it's often a founder who's maybe passionate about the thing that they're doing. Maybe the product is somehow related to what they do, or somehow related to their life or something. But I assume that they're probably not like digital marketing experts per se, or maybe they're just experts in one channel.
Yeah, I think, well, it's so hard to generalize. Okay, so some people have obviously had an idea about a product. Some people have thought, oh, there's this boom going on in third-party sellers on Amazon. I want to get into that. Some of them have thought, oh, D2C is a massive opportunity. So some of them have kind of iterated a few different products until they get to where they are. Some of them just kind of had the amazing product idea in the first place. I think they tend not to be digital marketing experts, but they tend to have cracked, one or two channels. I mean, some of the companies we look at, it's wholesale, so they might have got a few wholesale deals. They achieve a significant scale, but I think all of them have realized that it's hard for them to take it to the next level, because they can see that in order for them to do that, they would have, if you've cracked wholesale, your next thing is, well, how do I go direct to consumer? Well, I need to understand how to do all the advertising on Meta. I need to build the Shopify store. I need to do, there's just a lot of other stuff that you have to do. Google, there's a load of different platforms you can learn. And I think some do try that, and they find agencies. Agencies also there's a sort of catch-22 in place. I think this catch-22 of any time you're going from 0 to 1 is very difficult. So if you try and do it internally, it's very hard to afford to buy someone that's, hire someone that's really good at Amazon, and someone that's really good at Google, and someone's really good at Facebook, and all the other channels. So that's quite difficult. If you go to an agency, then the issue is because you're at 0, you're not spending a lot of money per month. A lot of agencies would expect a minimum spend level. So if you want to go to work with a really good agency, you have the same problem. You're going to have to commit to a huge spend, and it's really hard to go from 0 to spending £20,000 a month on Facebook and get any. You just burn a lot of cash with no certainty of getting anywhere. So then you have to work with sort of freelancers or smaller agencies who may not be quite so good, but then they're trying to do the Herculean thing of getting something off the ground and getting it started, where you need to be really expert. So I think there's just this obvious structural reason why it's quite hard. So a lot of people have cracked something. We bought a business recently called Nothing Fishy, which is a vegan omega-3 supplement, and it's a really nice business. And what happened there was he's a vegan. He had ideas for a few different businesses. He was trialing things out. But the omega-3 supplement, it was the right product at the right time, and it worked on Facebook, and he was working with a kind of independent freelancer that just cracked Facebook. And Facebook back a few years ago, and everyone's finding it harder now. But it was very good at just operating automatically and finding you customers. So he got to this great position, built up a ton of subscribers, but growth was slowing. Also, the iOS update, the kind of changes in privacy last year meant that Facebook as a channel was getting more expensive. It was very hard for him to kind of build the business that way. And so the obvious step was to diversify into multiple channels off Facebook, but that was a big ask for him, and he'd been doing it for several years and he wanted to do something different. So it was just a really good time to sell to us and us to take it on. And we're looking at, it's got a very nice brand. Our ethos is very much about being more sustainable. The background to that is my belief is that kind of economic progress relies on trade, and so people buying and selling stuff, it creates wealth and it lifts people out of poverty. And despite all the bad news that's going on in the world at the moment, actually for the very poorest, more and more people are being lifted out of absolute poverty. So I don't think the solution to the climate problem is to degrowth and stop having trade. That's a real powerful force for good that's improving so many people's lives, and those people that are being lifted out of poverty are getting better access to education and healthcare. It's an amazing thing. So you obviously don't want to plunge those people back into poverty, but if you're going to be doing that trade, you want to do it in a way which is sort of socially responsible, and being sustainable is part of that. And in fact, we're putting 25% of the business into a foundation to promote sustainability and social mobility. But all the brands that we buy, we're also looking for the opportunities. How can we make these brands more sustainable? For Nothing Fishy, actually, they came kind of sustainable out of the box because it's not affecting marine life because it's made from algae rather than fish. That's why it's Nothing Fishy. It comes in a recycled and reusable glass container. There's no plastic. We don't use any plastic. Then the refills come in a compostable pouch. So very low environmental impact. So it had this very nice core brand, but really, it's so different. I mean, going to the sort of semantics of what's a brand and what's not, but really he'd created a really good product that appealed to a lot of people, and he was able to sell it on Facebook, right, at a reasonable CPA. And that dynamic was changing. But as we acquired it, we're like, well, we're going to refresh the brand. We're going to improve the website. That will improve conversion rate, which will make Facebook work better. But also we're looking at all the different channels. So, it's Google, it's TikTok, which we, started doing TikTok already. And that will kind of grow that business. And also he's a one product company, or he was, and we're going to launch additional products. He's selling primarily in the UK. We will also expand into Europe and into America. So there's lots of upside for us to grow that business, but something that it would have been very, very hard for him to do without, he'd have to take on funding, and that's just, it's just a challenge to get through that hurdle.
Very cool. I think that was a great example. I think that just painted really well how you work, or how your business works, and how you acquire brands and what you do with them after you acquire them. One thing that I was always curious about, so I know a few companies that they're using a similar model to yours, right? I think one that I've followed quite a lot is, do you know who's Andrew Wilkinson? Tiny.
Yeah, absolutely. Yeah.
They have a sort of a similar model, right? They acquire companies. Their focus is on, I think, mostly digital businesses. So small tech businesses, job boards, SaaS, etc., etc. They acquire them and then they grow them. And they always acquire small, profitable brands. So in a sense, similar to yours. And one thing that was always very puzzling to me was, well, two things, I suppose. And I think the first question I already understand now. My first question back in the days was always like, but why would anyone want to sell a really good business? I think there's a number of reasons, but I'm curious also what's your answer to that. I think I have a few answers now. And the other question is, if there's a really good business that's for sale, let me rephrase that. Why isn't everyone buying them? If there's a really good business that's available for sale, is it really hard to source those businesses, or
Well, I'll do the first one first. So if you're growing a business and anyone wants to try and buy your business, you end up in this horrible catch-22 where you're kind of crazy to sell, because if they're offering you this much money for it this year and you're going to be X amount bigger next year, then they're going to be offering you, X times that number next year. So that number is always going to get bigger if the business is really good, and hopefully you're enjoying it. So why would you ever sell? That's a kind of crazy thing to do. But then on the other hand, you do have all of your wealth tied up in one incredibly liquid asset, and something horrible could happen to that business. And the bitterest people I've ever met are people that had a kind of really kind of life-changing offer to buy their business, and they turned it down because they couldn't see how this business was ever not going to kind of carry on motoring, and then everything went wrong, and then they never got the money, and then they just feel, oh, I wish I'd sold. So I sort of feel, it's different for everyone, and everyone has different levels of ambition and different levels of risk. But if you're being sensible, it comes a point in your life where you say, hang on, I can cash in, I can guarantee this amount of money, and that just looks like a sensible option. But there are lots of reasons. I mean, some people have been doing it for 10 years and they want to retire, or if you're a sole, or even if there are two of you running the business, it's pretty relentless, particularly in e-commerce. Right? You've got to stay on so many things, like the ordering, the making sure everything's always on, customer service. How do you go on a 2-week holiday when you've just got this onslaught of stuff always happening? Amazon is really tricky as a platform to operate on. They're always sending you these things saying your account's been compromised and we're going to shut the whole thing down unless you submit these 50 different bits of paperwork in the next 24 hours. So if you've been running a business like that, sometimes you just need a break. So all the reasons, like people have a new idea, they want to cash in, they just want to have the financial stability, they want to cash in, they want to retire, so there's lots of reasons. And the second bit,
people also just build to sell, right? I think that's not so uncommon. You just build a brand with the objective to sell it and to make that relatively large sum of money, and then go on to the next thing, or retire.
And it's definitely good to sell it before, like, okay, there might be a horrible disaster that hits your business. That's terrible, but that's quite rare. What's more likely to happen is, when we look at a multiple we're prepared to pay for a business, if the business is growing 100% a year, it's worth a lot more than a business that is flat or declining. It's not just like, oh, it's got 500,000 of EBITDA, therefore we're going to value it at 3x or 5x or 6x or whatever it is. It really depends on that growth. So just by in fact, there was one business I was talking to, and they were like, I don't want to sell because we're going to grow so much over the next year. I was like, yeah, okay, that's fine. And you may grow that much, but we've got to believe that you're going to do it again the following year. Or you could even end up in a situation where, although your profit has increased, your growth rate has declined. And then because the multiple is lower, your business is actually worth less. So and we see that in tech. If you're going 100% a year, you're totally different valuation than if you're doing 10% a year. And if you went from 100 to 10, you would have grown the business, but you'd be worth a lot less. So, the second part of your question was, there are lots of people that want to buy these businesses, but they're not. The businesses aren't perfect. It's just there's always something that's problematic with them. Maybe it's the growth rate. Maybe it's the mix of revenues, or some people don't understand some platforms that like not everyone would understand wholesale and direct to consumer marketing and Spotify and Amazon. So depending on what the mix of your revenues are, it just cuts down the number of people that would buy these businesses. I think just to differentiate from what we're doing from Tiny's, we're really integrating them all into one whole business with a common platform. And the reason why I think this is kind of this idea of buying businesses and grouping them together isn't new, and roll up strategies or whatever have been around for a long time. But I think what makes the difference is, in the old days, if I wanted to buy a company with 500,000 or 1 million of EBITDA, they're going to have 20, 50, 100 staff. I mean, they'd have a lot of staff. They'd also have a lot of kind of different technology platforms that they'd either built themselves or they'd knitted together in some kind of complicated way. That doesn't exist for us. So, we see the businesses, they have 2 or 3 staff, or maybe they have 14 staff, but 5 of them are outsourced customer support agents or whatever it is. So relatively low staff numbers. Because a lot of the stuff that goes into making your company is outsourced. But like logistics and even production of the goods. It's, you know, you're producing it in China. Your shipping company is an outsourced shipping company. Your warehousing company might be outsourced. So you just don't have that sort of staff integration issue, and that kind of cultural clash issue of putting companies together is always, there's a risk that things wouldn't work. And the other big one is the technology platform. So the people integration and the technology integration are the two reasons why kind of acquisitions don't work. Well, if we have very few people and very few of them actually come over with us because the founder is kind of cashing out and leaving, and also the technology tends to be Amazon or Shopify or some combination of sort of D2C plug-in apps that they've knitted together a kind of their technology platform. We can take their data from Shopify and Amazon and we can plug our own reporting into it, which is most of it's off the shelf stuff that we've put together. And we can be getting our reporting out of that business in the way we like to see it the following day. So the speed at which you can acquire businesses is faster, and the speed at which you can integrate them and get them working for you is faster. And that's what's changed things. I think the kind of roll-up strategies is kind of like a private equity model where, you know, you're hoping to get your sort of 20% a year returns. We think we can double or triple that rate of return because of the speed at which we can acquire and integrate and then grow the businesses. So I think it's something not wildly different and new, but it is quite new, and it's sort of something that you couldn't have done. A friend of mine started an e-commerce business a bit over 10 years ago, and she had to have, you know, a whole team of developers to build a website. Well, that hundreds of thousands of pounds of development that went into it, I can turn on for free or for a small monthly payment with Shopify. So it's incredible sort of time for that to be happening.
That is very cool. What was I going to ask? So you said you run everything under one umbrella then. So I suppose there are separate brands, but it's all managed by one management team, and then you got like marketing experts and teams who are kind of managing the whole thing.
Yeah, exactly. So there'll be quite a small team that will represent each brand, a kind of brand manager. They kind of own the brand, and then they tap into all the internal resources. So kind of easy way of thinking about it is we're like a load of agents. We're like agencies. So we have a Facebook agency and an Amazon agency and a logistics agency and a finance agency, and that's a sort of bought then as a service by the individual brands, and so they just use what they need to use. So that gives us amazing scale. So I mean, even in that first example I was saying, where could they go out and hire a Facebook person? Well, yes, they could, but who are they hiring? Are they hiring a really senior person that really understands the strategy and therefore doesn't really want to do the implementation? Or do they want to hire a doer that's going to do a bit more of the implementation, but then who's managing them and setting the strategy? And then if you hire both of those people, that's even more expensive. But we can have a structure where we have, you know, like our Amazon team is 7 or 8 people or something. So we've got, you know, a sort of leader that understands all the strategy. Then we've got specialists in Amazon operations, specialists in Amazon advertising. Then we've got the people that report into them that do a lot of the work. So I just don't think there's any way of doing what we're doing without being us, if you see what I mean.
Mm-hmm. Very interesting. You mentioned also when we were talking before when we were just scheduling the podcast, you mentioned that you like to talk about incentives. And I think this brings me to incentives because I think incentives are super important for success, and especially in the kind of organization that you have, right? You get different brands, and then you get different people responsible for those brands, and then you get teams that help those different brands. So I'm curious what you have to say. What kind of incentives do you set? And you said that's a topic that you're interested in, that you like to talk about. So.
Yeah, I think I was an economist at university, and I always had this, you get this idea of the kind of rational human, and I was always thinking, if you align the incentives right, the kind of company will manage itself, and you won't have to worry about kind of keeping on top of people because you've got this perfect incentive system. Spent so much time trying to cook up commission plans or bonus schemes that would kind of motivate people to do the right job. I think it's actually really hard. Obviously, you don't want an incentive scheme that works against what you're trying to achieve as a company. But actually, I think people are just they have different motivations. They want to feel rewarded. They want to feel cared for. They want to feel that they're improving themselves. Sometimes they want an easy life. So, for example, if with salespeople, if you've got a whole lot of leads and some of them are previous customers and some of them are cold leads that you haven't spoken to before, and you say, well, I'll pay you 5 times as much commission if you close one of these cold leads than if you close the existing business. You think, well, or whatever that number is that would reflect the comparative difficulty of closing a deal. Maybe it's 10 to 1. You sort of think, well, that I've got the incentive right, so that'll sort it out. But in practice, the experience for a salesperson of phoning a load of customers is so much nicer. They take your calls, they phone you back, they agree to having a meeting when you want to have one. Then they're nice to you and they say nice things about the product, and it all feels lovely. And so you're just going to always do all of those, even though you could earn much more money by doing the hard job. So actually, it's not an incentive issue. What you need to do is you have a team which only have cold leads, and you have a team that only speak to customers. And some people, there are some people that are hungry and will go out and do that kind of cold working stuff, and some people want to have more of a kind of client management role, and they'll do that. So I think I've spent a lot of time trying to concoct incentive schemes that would manage the business for me, and what I've realized is no, there's absolutely no mistake for it. There's no way of replacing making sure people are doing the right jobs that they enjoy doing, that you're given really clear objectives, and that you stay on top of them, and on top of them in a good way, on top of them in the way that your personal trainer gets the most out of you at the gym. That's what you want for your manager, someone kind of coaching you, constantly giving you feedback, showing how you can be better, but being really clear of what better looks like. What better looks like is what advances the company's goals the most successfully, not some. The trouble with incentives is, particularly if they're, ideally you want all your incentives to be related to profit, which may be long term. So you might, that's hard to do. Like, what's the profit of a customer? If I sign a customer up in a SaaS business and they're expected to be with the company for 10 years, how do I know what the profit of that business is going to be? I don't. So I set a target related to revenue, but then the salesperson has an incentive to go for the highest revenue customers, not the best fit customers. So the solution for all of this for me is give people equity. I want people to be thinking about what's going to create the most long-term value. That's what I'm in business for, is to create long-term value. It's not about a quick buck, isn't it? Ultimately, and I think as you get older, you realize your time frame lengthens out. So I'm very happy to think in 10-year time frames now. And if I want to think what's going to make us the most money in 10 years' time, lots of other people have their different opinions about that. But as long as they're making the decision with that as the context, what's going to make us the most money, and not even just the most profit, but the most valuable profit. So a kind of a repeat purchaser or a subscription buyer is a higher value customer, or when you've built a brand, that's more high value profit than if you're just getting customers from Facebook, because Facebook could be switched off. So understanding that kind of value, that quantum and value of profit in the future is what we're kind of aiming for. And if I want people to be thinking 5 years in the future, 10 years in the future, and the only way I can incentivize them on that basis is by giving them equity. And the other thing is, I think people give equity for the wrong reason. So they see equity as a way of attracting and retaining staff. First of all, I just think there's a sort of level of pay and equity which might reflect market conditions, and you have to be at that level. You can't be below it. But generally, people should join you because you've got a really good job that's helping them progress in their career. I'm trying not to get too much down a side track here and talk too much about hiring, but you want to hire someone that's taking a really significant step up in their career, and you want to train them. They'll stay with you longer. They'll see the career progression, so they're happy, they're motivated, they're learning, they're really enjoying it. They can see where their careers how their careers being improved at your business. That's a fantastic employee for you. If you hire someone that's taking a sideways step, they're going to be a bit disgruntled. Well, first of all, why are they taking that sideways step? Were they not very good at their job previously? Did they not get a promotion there? Why are they doing the sideways step? But then they're really going to be agitating for a promotion very quickly, but you actually need someone to kind of do that job for a while and then kind of grow up in the business. So I don't think you want to give equity to attract people, because if you have to pay a higher salary and a higher equity in order to attract these sideways movers, that you don't want to attract anyway, what's the point of that? So the person that's coming is taking like one or ideally even two big steps up into a job, and you're going to support them with training and development, and that's an amazing offer to someone. That's why they should be attracted. They should be attracted because they buy into your mission, they buy into your values, they buy into the job specific opportunity you're offering them. And then retention. I mean, why would you want to keep someone in your business if all they were doing is hanging around for some payout because they had equity? You want them to be staying in the business because you are still the best place for them to be for their career. They can see that they're going to get these training opportunities. They're well recognized by their managers. They find it a fulfilling experience. They're given new and interesting challenges to work on. Why would they leave that company? They're doing this learning. They're improving so much. Even if their pay isn't going up, although I also think you just pay people market rate. So, you're not overpaying, but you're not underpaying. So it's fair. Why is someone going to leave a job like that? So the last thing I want to do is give the underperformers and the people that aren't really enjoying it and aren't really delivering a reason to stay in the business just because they might get some payout. So the solution to that is we give people everyone in the whole company gets equity, and the big solution is once you earn it, once it's vested, it doesn't get taken away from you unless you get fired for gross misconduct. You keep your options when you leave. Most companies do one or two different things. One, they either say, leave the company, you lose your options. Everyone's a bad leaver. And certainly when you speak to a lawyer about your equity scheme, they'll generally say, here's our standard definition of a bad leaver. And when you read it, it says anyone that leaves the company is a bad leaver and they lose their options. People are getting a bit better than that, but definitely 10 years ago, that was absolutely standard lawyer. Now what they do is they say, oh, you have 60 days to execute your options and you pay the strike price. Well, that's a bit tough. I mean, if you give someone 10%, that's what we give people up front, is 10% of their salary, value of their salary at equity at the current valuation. So when they leave, if they wanted to exercise those options, they're going to have to pay 10% of their salary, which is probably, probably a good month's salary, or possibly more once you factor in tax. You do the calculation. So then it's unfair because it's only people that can afford to put down a month's salary on what is still, even though I don't think it's a risky proposition because I'm so enthusiastic about what we're doing and it's going to be amazing and brilliant. If you spoke to a financial advisor about where you should invest your money, they probably wouldn't say put a hefty chunk of your net worth into this highly speculative and risky asset. So there's a difference in opinion there, but it's a bit, first of all, it'd only be the people that could afford to do it that would do it, so they get a benefit. And secondly, I would never suggest to anyone they should put anything other than money they're prepared to lose into this sort of asset class. So that's not really fair either. So the only way to do it is to say you keep the options. You just don't have, they're vested, they're yours. You don't have to sell, you don't have to give them up, you don't have to buy them, they're just yours. And then if in 10 years time, or when we have some sort of exit event, or maybe we start paying dividends or whatever it is, there's an opportunity for them to get some value, they can still realize the value they've created. So someone that comes and stays with us for 2 or 3 years will be making decisions that will affect the long-term value of the company, and they will benefit from it. So everyone benefits. The other thing that's really important about that is, my preferred definition of success is this sort of value of profit. And it gives you the right to talk to everyone in the business about the mission to create this profit, build this business. So we've got this mission to be the best place for new consumer brands to grow. Growing new consumer brands is quite easy to understand, but best is very subjective. But part of that for me is this kind of quantum and value of profit. Very hard to say that you were doing something that was the best. I mean, look, everyone can define best however they like, but for me, I think there's got to be an element of scale in there. We've got to be big. We want to be $1 billion revenue business at some point, and that's going to, there's to be an amount, but that's not a target because we don't want to be that business, but losing money hand over fist. So there has to be a sort of amount of gross profit. And I want to talk about that as a long-term objective for people. And if they don't have any skin in the game for that, well, why do they care about what my ambitions are for 10 years time for gross profit? So if I want to align everyone around that mission, I'll just do it. The other part of best for us, by the way, is about being a good corporate citizen. So we're putting this equity into this foundation. We're also applying for B Corp status because I think sustainability is part of the puzzle. But what I really like about the B Corp, I don't know if you know about it, or for readers that don't know it, it's a global certification for how good a corporate citizen you are. So part of that is sustainability, but it's also how well do you treat your staff, how well do you treat your suppliers, how well do you treat other stakeholders, even investors. So do you have generous paternity leave and maternity leave? Do you pay your suppliers promptly? Do you audit your suppliers to make sure they're behaving ethically to their staff and their suppliers, and all that sort of stuff? So we really think that. So for us, if we build these new brands and we achieve a really significant scale, and we've done it all by being a really good corporate citizen on the way, that for me is the definition of success. And so hopefully everyone lines up on that. But there are three things there. There's the building the brands, there's being a good corporate citizen, and there's the profit we're making. The first two there, the building the brands and the being sustainable, that's everyone can kind of get on board that ship quite easily. But then I don't want them to then think, well, why do we keep talking about the profit we're going to be making in 5 years, 10 years time? That's not really relevant to me. And then they've got everything, and then we're all aligned. And I think it's really hard to align people without that kind of, how does it all ultimately relate to long-term profitability of the business? If you want them to think and act like an owner, then the best way of doing that is to make them an owner. So we don't have any bonuses. We don't pay bonuses. You get a salary and you get your equity, and that's it. It's a small point on the equity is people start off with 10%, but when they get as they get promoted, our principle is we want people that have either value it more or deserve it more to get more. So people that are being more rapidly promoted, every pay rise, they'll get a chunk of equity so they'll get increasing equity share. And when they get that pay rise, they can take a lower pay rise and get equity instead. So the people that value it mostly, because also there's no point giving people equity. It costs us. It's a cost to us if they don't really value it. If they're just here for a couple of years of job and they would leave, they don't care about what happens in 10 years time. Well, then we don't want to give people the equity. So those are the principles we use.
That's very inspiring. I hope a lot of people are going to listen to this. I think that was a very, very good description of what you do and like why you do it, why you set it up like that. So that was.
I had because I've been doing these. I've been doing these events, and we had a panel discussion, and we were talking about incentive schemes. And I won't say who it was on the panel, not because I don't think it's anything sensitive, but just because I haven't asked their permission. But they had a company. It sold for 100 million. They had an equity scheme, and no one was happy with the outcome. Even though some people would have earned a fairly decent amount of money, not very many people did, because the exit price was considerably lower than they anticipated. They thought it would be like 300 million. It ended up being 100 million. And that makes a real difference, particularly when you start factoring in liquidity preferences for investors and so on. So the amount of money that was paid out was much lower than expected. But two things happened. First of all, people would understand the company sold for less than expected, so I got less money. But it wasn't a third less, it was less than a third less. And so everyone was pretty miserable, even if they had quite a good outcome. And I just thought that's it's so easy for equity schemes to end up with people being really unhappy. And part of our thing is to really educate people about what does this equity scheme look like. If you primarily use your equity scheme for hiring, then what happens is you always promote, you always say how wonderful everything is, and you talk up the big game of how the company is so massively valuable, but you're creating this potential for disillusionment. So our thing is sort of much more downplay it, explain why we're doing it, very much the way I explained it to you. But then also when they're in the company, just always explain to them, this is how much this equity is worth, and these are the different scenarios in terms of funding and what it would mean in terms of outcome. So just everyone doesn't have that expectation is so much of it. Like the people that got a decent amount of money but were expecting a lot more were really miserable, even though they got a decent chunk of money. That's a bad position to be in.
That is that is bad. And I know a number of examples when that happened, especially, in most of tech startups, I would say, here in London, especially from what I hear about. When somebody was expecting, like, oh my God, I'm going to make so much money from these options when we're going to have a liquidity event, and then they get, I don't know, like £3,000, and they're like, yeah, okay. I mean, yeah, it's £3,000. I mean, it's great, but I actually thought it was going to be, 10 times more or whatever.
Yeah, no, exactly.
And it's a big disappointment for people. It's like, and you work really hard towards that, and then you feel like, well, I wasn't actually rewarded for my hard work.
Yeah, and I feel we'll be 2 years old next March, so we're still pretty new. And I still feel that although we raised a fairly significant amount of money in our last funding round, so we raised £16 million, which at the time was worth $22 million. I don't think it is now, so I've gone back to quoting it in pounds because we raised it in pounds. But still, what we're doing is there's a lot of stuff we're proving, but we're only a year and a half in, so there's lots of stuff we haven't proved. And when we do hit those proof points, we'll raise another chunk of money, and we'll, everything will be much more certain. So I just sort of feel those people that are joining at the moment should have the opportunity to get a larger chunk of the equity and have a really meaningful outcome, because they've taken the risk. Although again, I don't think it's a risk, but logically there is a higher risk in an early stage company than there is one when we're 5 years old and we've gone through 2 other funding rounds and we've actually got the revenue and the profit, we've got all the proof points. Those people, kind of their equity should really correspond very closely to their pay. It's like it's a nice extra. Maybe it is 10% extra on their salary, which is a really nice extra thing to have. But the people that join at the beginning should expect to get their entire salary out as an exit event, or ideally 10 times their salary. That's for the very early starters. That's how it should work for a successful business. But there's lots of rooms for things to go wrong. If life has taught me anything, never quite works out. I should be able to attribute this, but I don't know who it was that said it. But they said they didn't think they'd be able to write a novel, but they had created some great works of fiction in Excel. And I think that's so true. You put all the numbers in, and then you look at it like, oh, in 5 years' time, this is going to be amazing. How could it go wrong? Well, you find out on the way.
That's funny. I never heard that before. that's a good
I know.
one.
I've stolen it off someone. I should know who it was.
Can you tell me a little bit more? I want to go back to the brand managers that you mentioned before. Are those people that used to be business operators themselves, or not really? Do you have some kind of educational program that you'd educate them? Because it is, I suppose, I don't know how much you are personally involved in every single brand, but I suppose the brand managers have a decent amount of responsibility on their shoulders and need to have the right skill set for that, and the right, I suppose, not just skill set, but experience, personality.
Yeah, well, it's a problem. We're trying to answer that. What exactly does the brand manager do?
Yeah.
Because if you look at it one way, so we take on a brand, and then they go. So the brand manager can go to the Amazon team and say, "What do you think the opportunity of this is?" And then they could go to look at the Facebook opportunity. They look at the Google opportunity, and they can say, "Well, this is what we think are the likely returns. This is how much it's going to cost." And they can say, "Well, this one sounds like the best idea, and that one sounds like." Well, what skills do they really need to do that? They shouldn't be managing the day-to-day business of the Facebook campaigns. So yeah, what are they? Should they be someone from a brand building experience? But actually, we're going to have like a brand building team. So our strategy is initially you acquire them, integrate them, you do the obvious optimizations of what they're currently doing, then you launch new channels, new markets, new products. Those are all quite obvious. And then for the ones that are doing well and achieve a certain scale, you invest more in the brand building. So at the moment, we're not doing a lot of the sort of brand equity investment work. It's expensive. It's quite long term, and you don't want to do that for businesses that haven't achieved a scale. But in the next few months, or certainly year or so, we'll have a team of branding experts that will be doing brand strategy and customer research and all that sort of stuff. So what is that skill that person needs? And at the moment, I think we're saying this is a sort of great job for a talented generalist. I mean, they should be the guardian of the brand. They should be the person that you just need one person that really cares about it. So like, will the Amazon team really care about 1 out of 20, 30, 40 brands? Well, probably not. So you need one person that's responsible. But the skills they need, I'm not sure what those are. I mean, you could just be a very bright person that is passionate about what they're doing, and you probably do a fantastic job of it. In fact, one of the first people we hired was a incredibly impressive woman, but basically a graduate, and she is now a brand manager, and she's solely responsible for one brand that turns over about 2 million and a bit a year. So this is within a year of being with us. She took over responsibility for that, and she's also kind of looking after working on some of the other brands as well. So yeah, that's someone with no experience, but just with someone that's very bright and very ambitious and very motivated by what we're doing, and is doing a great job of it. So I don't think there's a particular skill set that those people require, or maybe there is. We just don't know what it is yet.
Yeah, definitely sounds like a job for a generalist and somebody who's just driven to drive results, right? I think that's the skill that we all look for in pretty much all employees or team members, right? And it's often hard to find. But yeah, that's I guess just that skill to make things happen. That's something that I find so rare but so valuable. And especially in this kind of role where you just need to sometimes improvise a little bit or innovate, or go to the right team and make sure that they actually deliver and push for results and be target driven as well, I suppose, right? You want to see growth, so you need to always make steps towards that growth. And that's
I think the same challenge for these people, similar to what I was saying about the salespeople, is like there's a kind of comforting, oh, I'll just do the obvious optimizations. I'll just do the obvious product launches. So you might look at a company and you might say, well, so we've got this vegan omega-3 supplements business. Vegans also take other supplements. So you could look at the best-selling supplement and you could launch one of those supplements. That would be an obvious kind of product extension. But there's only so much you can do. Once you've done the most obvious product extension, maybe you do the second most obvious one, there's a really diminishing return on how many more products you can create that are really going to move the needle. And then you expand into America and Europe, then what's the next big one? So that you get this sort of diminishing marginal kind of return on those activities. But it's comforting because it's predictable. That if you launch if you launch one product and it's done X well, and you take the one that's 80% of the opportunity that you launch, that you'll probably get a similar result, 80%. Yeah. So it's comforting. And the difficult thing will be, how do we push people to do the sort of more daring and difficult stuff that might be a big, great return for us, but is also much more likely to fail. And I think how you encourage people to be open to failure and not to stigmatize failure is really difficult in any business. And I think partly you can do it by dividing, so you have a kind of failure team and a business as usual team. It's a good way of doing it. But ideally you want everyone, even if they're in the business as usual team, to be taking some kind of bold bets and accepting that some of those things won't work out. And that's really hard to do. I think it's too early to say whether we've done it, because I think we have been very focused on the optimizations, but we're always very open about things that aren't working. Whenever we do a kind of company meeting, we always do some retro work where we talk about things that have and haven't worked. There's a lot of stuff about the sort of psychological safety. I mean, you can talk about things that haven't worked or you like, but if when someone makes a mistake, their manager turns around to them and says, "Oh, what the hell did you do that for?" Or, "Oh, I could have told you that would be a disaster," then they think, "Well, I'm just not going to try and do something interesting again." But we're trying to think about how we create that environment where people can you want to kind of celebrate the mistakes as well, or because there's sort of two types of mistakes, right? There's mistakes where you just screwed something up because you didn't pay enough attention to it. We're never going to celebrate that kind of mistake.
Yeah.
There's a mistake where you went through a logical process, you had a hypothesis, you believed it was going to work for a sensible set of reasons. You didn't spend years trying to compile data, but you made a kind of sensible guess, and then you went for it and it didn't work out. That's fantastic. You've done something that every 1 in 10 of those is going to create something wonderful for us. If we're bright people that are doing, coming up with the right hypotheses, a lot of these are going to work for us. We need to be celebrating those ones.
Yeah, completely agree. I think a lot of it probably does come down to culture, which is incredibly hard to build, as you said, right? And it takes time, and it takes probably a lot of corrections. Don't know what the right... and one thing that I remember that Andrew Wilkins also talks about often is how one of the hardest things for him was to just allow people to do mistakes. Because obviously, so his structure is a little bit different, right? Because they have an independent CEO for every single business, and then that CEO runs the business and they don't really touch it that much. But he said that was incredibly hard for him because, he had so many years and so many successes in business. So he could see when the CEO was making the wrong decision, but he learned that he should not intervene, because if he does, then the CEO is going to get upset, because those are people who like autonomy and they want to run their business, right? They don't want to have somebody above them who tells them what to do. Yeah. And he said, the hardest thing is when I know that they're doing the wrong decision, and it's going to take us 2 years to fix the mess after that decision, but I need to allow them to do it, because otherwise they're going to leave or just, not enjoy working with me anymore. And then in the really long run, I'm making an even bigger mistake if I tell them what to do.
I don't quite agree with that. I think if you saw someone making a mistake and it was a really significant mistake, I would want to tell them that, or at least I'd like to say, I have some feedback for you if you'd be interested to hear it. And if they say, I'm interested to hear it, I'll say, look, this is obviously going to come across as critical because I'm telling you something where I have an opinion that's different from what you're thinking. But let me just tell you my point of view, and you tell me, and you can decide whether you want to do it. That's not like telling someone to do something different. It's saying there is some information available in the world. Like if they were following some wrong strategy and they listened to a podcast and someone had done exactly the same thing and had learned from it and had learned that it wasn't the right thing to do and did something different, that would be a great learning experience for them, and they might change their mind and change their opinion. So I think you should be able to do that. You should be able to give them that feedback as a suggestion, but absolutely it's their right to do it. And the whole point there is it's about the forgiving them. So if I go in and I say, look, I've got an opinion about something, and I've been wrong loads of times about loads of stuff. So just the fact that I think this is the right way or I think it's the wrong way, it doesn't necessarily mean it is. Absolutely. So I can give them that point of view, and I'm very open. So yeah, I made so many mistakes. Always happy to talk about those. And if they then don't follow your advice and they do what they do and it did work out it turned out to be a disaster, you just say, look, we had a difference of opinion, you did it your way, it didn't work out, maybe my way would have worked out better, maybe it wouldn't have done, for all I know, and you did what was, and it was fine. So I think it's the not saying I told you so, and the saying, oh, I've got this point. If they feel Ben said it should be done like this, and I could do it my own way, but if I come back and it hasn't worked, he's going to say, ha ha ha, I told you so, you're an idiot. Yeah. No one wants that. So I think I always have this thing. I know that I make mistakes. When I make mistakes, I always, obviously, people always say about assume good intent. Well, I know exactly the intent I had, and I obviously was trying to do the best thing, and I obviously tried to take into account all the factors, and then I got it wrong. And so I think, well, God, sometimes you get things wrong and you brush yourself off and you forgive yourself completely. So I just sort of remind myself that that's how forgiving I am to myself when those things happen. And then I try and apply that to other people. What would annoy me is if we had a kind of retro, they did something wrong, and it was obviously a disaster. And then you said, so what did we learn from that? If they started saying, well, the market timing was wrong, a competitor launched another product, it's all external factors, it's nothing to do, no ability to be introspective and say, well, I should have checked that, I should have done more customer research to see whether the market timing was right, or I should have done more competitor research to see if they were launching a product, or I should have reacted faster to the competitor launching the product. If it's all external factors, it wasn't my fault, well, they're not learning from their mistakes, and that is the valuable bit, is the learning you get from the mistakes. So I'm happy for people to make the mistakes. As long as they learn from them, that's really valuable, and they improve as a person. If they don't, I mean, basically, we've gone for an hour now without me recommending Mindset by Carol Dweck, which is the best book, I think, in the world, because it's all about a growth mindset. It's all about this thing of, do you accept that you can change and improve yourself, and do you see these sort of failures as learning experiences? It's a sort of Bible that I try to live by. So I generally recommend it to everyone. Normally in the first 10 minutes of meeting them, that's roughly how it goes down. So.
Okay, I'll take that as a very strong recommendation. So I'll definitely check it out. I think I've heard about it, but I've definitely not read it. So I'm going to check it out.
It's very popular. So
show notes.
One of the things that's really compelling about it is they did this test. There's loads of stuff that goes into it, but this very simple example. So they did a test for children, and a math test, and they got the results, and they said to one group of people that did well in the test, "Wow, you did really well on that test. You must be really clever." And they said to the other group, "Wow, you did really well on that test. You must be a real hard worker." Mm-hmm. And then they split them again. They did one group of the people that had done well in the test that got told they were really clever. They said, "Would you like to do a harder test?" Mm-hmm. And they would generally say no, because they thought if they did a harder test, they would do less well, and they would lose the label of intelligent, which was valuable to them. Mm-hmm. Whereas the other group, if you told them, "Would you like to do a harder test?" they're like, "Yeah," because their badge is hard worker, so they would then want to do the harder test, and they would do it. So it's little things like that. It's just like the mind, where your mindset is determines how you behave a lot.
Completely agree. It's a similar thing that I've noticed, and I think I've read a study about that, but I also notice it in my personal life and in my work relationships, is when you tell somebody that they're good at something, they just become better at that. When you tell them, obviously you want to be genuine, right? You don't want to just say that they're good at something that they're actually terrible at. But if they kind of have a talent for something, but it's maybe not their main strength, and you tell them, "Oh, you're actually really good at this," they just magically become even better at that, because I think they value the fact that they become that thing, right? If I tell you that you're good at design, you're an engineer, but you kind of have an eye for design, you're like, "Oh, wow, that's cool. I have an eye for design." So I think you start paying attention to that, and you're like proud of it, and you say, "Okay, maybe that's my second strength that I can develop," I suppose.
Yeah. Well, are we good at things because we enjoy them, or do we enjoy them because we're good at them? Well, we don't really know, but there's a very high correlation there. And certainly if it becomes part of your, we look at people that are brilliant at stuff and we assume they had some sort of natural ability, but actually maybe they just worked 10% harder than everyone else for a longer period of time. And then where they've ended up looks, this is thing about, people can look it up. It's called the mundanity of excellence. And it's a guy called Chambliss, and he did a study of Olympic swimmers, and he discovered that the top swimmers, there wasn't much difference between them and the not top swimmers. It's just generally they were putting extra hours in the pool. Well, there were some of the things like you're more likely to be successful if you've got wealthy parents because they can drive you around to swimming practice. Mm-hmm. But it was loads and loads of little factors that led up to something being fantastic as opposed to sort of quite normal. It wasn't we tend to think, "Oh, they were a genius," or maybe if you're Michael Phelps and you're physically built differently, there's a factor in there as well. But most people that achieve something brilliant just achieve it because they do the hard yards, they put the extra work in. And I think that's really liberating as a message to people that are working for you or your kids, which I was bored of me banging on about this sort of stuff. But everyone can be excellent, but you just can't switch it on. You can't just go from not being excellent to being excellent. It's hard work. It takes a hell of a long time. And David Beckham, the number of free kicks, the practice kicks, he's taken hours and hours and hours of kicking a ball. That's why he's pinpoint accuracy when he passes the ball. And that's the same for everyone. Everyone has to David Brailsford from British Cycle, or he was the head of British Cycling. He had this aggregation of marginal gains. He's like, if you find a lot of places where you can be 1% better, they all add up and they're really they're really significant. And I think if you believe you've got a kind of a growth mindset because you believe that you can improve anything that's wrong with you, you can get better. I learned to play the piano. I've been always said I was tone deaf. I couldn't do anything, and then just before the lockdown and into the lockdown, I learned to play the piano, and I was like, oh, actually, I can be musical. And I'd still, having read the mindset book and having recommended it to everyone, I still realized I had a fixed mindset. If I had to do something like that to prove it I shouldn't have done that. I should have just believed in the first place that I could have become good at the piano. I just didn't really believe it. Not that I'm that good, but I can play something that resembles music and not have people, So if you have that kind of growth mindset and you understand that it takes hard work to get there, that I think, you could look at that being quite depressing because, oh my God, it's a lot of hard work to get there. But I think it's really liberating. It says, if you believe you can do it and you put the hard work in, you probably can. I only slightly hesitate on that because I also believe there's just so much kind of never give up mentality going around on the internet and on Twitter and people's record. Sometimes if everyone is telling you your idea sucks and you should give it up. I mean,
yeah, that's a tricky question that I get often as well. Because I think the bigger problem for most people is that they give up too quickly, right? I think that is a problem for majority of people, that they get this idea and they're like, and it can be anything. It can be starting a business, or it can be just like, start doing sports or build a new habit. And then they do it for 3 days. And then on the 4th day, it starts raining and they're like, I don't really feel like doing it today. And then they don't do it anymore. And I think that's a problem for more people. So talk about those things.
But like if it's fitness or playing a musical instrument or even being a better manager, we know what good looks like, and you can learn it, and you can put the effort in, and you can constantly improve. And if you stick at it, you'll start noticing the improvements, and that's validating, and you can kind of improve. But if you've got a crazy idea for some kind of app that's going to connect your toaster to your coffee machine, or whatever these brilliant ideas that you might ask me about later are going to be, and if everyone just says I don't care, eventually you have to give it up. Doesn't mean just because J.K. Rowling contacted however many hundreds of publishers before she was successful.
That's the problem.
It does, but that's the wrong way around. There's a comic kind of cartoon I used to put up at the start of the events that I was doing for entrepreneurs, with the guy. He's won the lottery and he's standing on the stage and he's saying, "Look, let me just tell you about winning the lottery, okay? I did it. Anyone can do it. I put all my money into the lottery. I took a second job. I put money into the lottery. And look, here I am. I won the lottery. You can do it too." Well, that is what a lot of that kind of don't give up advice is like. But actually, yes, 1 in a million, someone would have had this idea and they'd have persevered and they'd have made it work. But maybe it's the 1 in a million. And so that's why I say generally, if everyone is telling you your idea is bad, maybe it just is, and you should listen to that, and you should just give up. But that's why I think. But certainly, if you should find customers, because no one could. If your idea is really bad, then you won't be able to find customers. So if it's really good, you will be able to find customers. If you can't find customers, it doesn't really matter if everyone else is telling you it's a bad idea. You know it's really good. But if you not finding customers, and then you're trying to persuade people to work with you, fund you, or whatever, and they're all saying it's a bad idea, you probably should just give up.
I think that's actually a really good point. The 1 in a million point, I think that's a good one, because you want to, whatever you do in life, you want to work on things where somehow odds are in your favor, right? You don't want to, I think you generally don't want to work on things where you have a 1 in a million chance, because, well, it's 1 in a million. So, think about if that's actually a clever and a smart way to spend your time, right?
Yeah, or maybe you do. I mean, that's the whole kind of Zuckerberg, Facebook is a 1 in a million. Yeah. There's a whole industry around trying to create that. And that's personally not for me. I think generally those people, either it happens to them by chance, or they've got a massive chip on their shoulder and they need to be doing something that's monumental, and they're going to grind away. And maybe that's, I just like the idea that if you start a business and you start a business in an area that is growing at 20% a year, 30% a year, then the average performer will grow at 20-30% a year, and that's a really nice business. And it's going to be better, and you can grow at 100% a year. I think I've forgotten his name, and now I've forgotten the company as well. But the fact, one of the crypto platforms, the founder said, cryptocurrency is nothing, but look, it actually adoption is growing at 2,000% a year. So if I can start something in this sector, and he started, well, I'll remember what it is as we carry on talking. But it's like, if I can start something in the sector, my company's, if I start a sort of crypto trading platform, I'm going to grow at the rate that crypto is growing. And if something's growing at 2,000% a year, that's a really exciting thing to be in. So find something that's going crazy and get into that.
Yeah. I wanted to get back for a second. I want to go back to, so we talked a little bit about excellence and achieving and, creating results. And you talked about mindset and you talked about hard work. I'm curious. So you obviously, you've been an entrepreneur for, I think, something like 20 years or so. I had several businesses, and now you're acquiring businesses, and you need to be a good performer and a good businessman. And you cultivate that also in the other people in your team and people who are managing your brands and so on. How do you think about performance, or how do you cultivate that personal performance in yourself and in the other people you work with?
Yeah, I think so one of our values is feed your future self, and that's really just all about being a lifelong learner. I think that's the big thing. We're having a whole discussion internally about how do we hire for curiosity, because I think all human beings are quite naturally curious, and I've got kids, and they watch some rubbish on YouTube, but they also watch some really interesting stuff, and then they're kind of full of interesting facts. I think it's amazing. Stuff that they wouldn't have got taught at school before YouTube, and they're learning this stuff, and they're not saying, "Oh, Dad, I had a really tough day in front of YouTube today, learning all these facts about the solar system or whatever random, or some kind of bizarre thing about nutrients in some food material." It's presented to them in a kind of really entertaining way, and they've soaked up that information and they've loved doing it. So I sort of think it's about being really interested in what you're doing, because if you're really interested, then you want to work hard at it. You want to learn ways of being better. I think a lot of people try and do something because they think it'll be successful, but they don't really want it. And I don't like this thing of like, find a thing you love and you'll never work a day in your life. And I think that we're able to enjoy lots of different things. And I've tried lots of different types of businesses, and I've enjoyed them all. But I guess I've been always interested in business. But finding something you're interested in, something where you constantly want to be improving yourself, is really important. Much easier to be kind of pulled by that motivation of the excitement of doing something than to kind of push yourself to do it. I guess, there's a big difference between signing up for a race and being excited about it and that getting you to do the training than just thinking, oh, I ought to be fitter. Just a sort of feeling you ought to do something, and then it's a cold, rainy day. Are you really going to get up and run 10k in that? Probably not. So you won't do it. So it's a sort of similar thing with work. You want that thing where you want to buy into the mission of the company. I don't obsess too much about that. I think people have to be aligned with our mission, but I think TransferWise had said this brilliant thing about no one was born being excited about money transfer. That's not why people join. And the mission is great. It's making people's lives easier. But I guess you could argue pretty much every business is doing that. I mean, the people buy a product because they believe in some way it's going to improve their life or make it less bad, or even if it's insurance, it's giving them some kind of utility. So ultimately, you're in the business with any successful company of making people's lives better. But that's a bit tenuous. No one woke up and said, I want to, got born and was like, I want to do money transfer, or I want to do e-commerce aggregation, or whatever it is. But the specific activity you're doing, let's say you really love marketing because you love thinking about how humans work, you love creating the content and trying it out in the wild. You want to join a company where they are open to people learning a lot about marketing, experimenting like crazy, doing all sorts of crazy things and learning from it. That's a brilliant place to join. So I sort of think generally people join us, they have to have that broad alignment with our mission and think we're doing the right thing, and they have to believe that more trade creates wealth and that you should do it in a sustainable way, because if they didn't, they'd be pulling against us. But probably they're really joining it because they see that kind of career enhancement opportunity. And so much, if you fill your company with people like that have that curiosity and they have that ambition and they want to keep learning, they want to keep improving, and they want to take on new challenges. Slight aside, but no one ever says gamers are lazy. People say gamers are lazy, but actually they're not. People work really hard to get for hours at a time working on games. It's hard work. Nowadays it's sort of recognized because people can actually earn money by being brilliant gamers. But when you do level 1 of a game, you don't think, oh, now I've cracked it, I'll just do it again. Or maybe some people do, but generally you take on the harder challenge. And if you fill your company with those people that always want to take on the harder challenge and always trying to improve themselves, all of those discussions about how do you motivate people just kind of disappear because they're self-motivated. You just got to give them the framework that they can achieve it. You've got to give them good feedback so they know. First of all, you've got to be very clear about what a good job is and what the kind of the mission of the company is. What are those objectives? Then you've got to give people the sort of freedom to try their own things. It's a bit boring, but that Daniel Pink thing of autonomy, mastery,
purpose.
purpose. So that kind of makes sense. And I think it'd be really hard to find someone that wasn't aligned with your purpose and didn't want to carry on taking on challenges and didn't really want to kind of carry on learning and turn them into a brilliant employee. You just want to hire those people that are kind of like that from the beginning, and that makes your life a lot easier. And I know we're certainly benefiting from it at the moment because we're 24 people, so we're small. And I'm involved in all of the hiring, and we're hiring some really fantastic people, and we can quality control them when they start really well because everyone can pay attention to them. And the real trick is, how do we make sure we're still hiring these great people, and how are we still creating this environment where they can learn and take risks and develop mastery as we get turn to a much larger company. I think that's really what it's all about, rather than some clever management technique or way of motivating people. Just find the people that are motivated, that you want the people that are going to push you, that are coming and saying, I want, how can I do this better? How can I do it better? That's that's what you want.
That's interesting what you just said. You want people that are going to push you. I had a conversation yesterday with somebody who's, I think he's in university, probably early university. And he said that he was never very pushy. He was always a hard worker, but he would never push for things. He said, well, things are going to happen when the time comes. And then he received critical feedback from his manager. He said he should be more pushy. And I said, and I think I was the same when I was younger. I think that over time I realized that, well, you should push for results, because if I'm not going to push for results, somebody else is going to push for results. So then it's better if I'm that person who delivers and, makes something happen. And yeah, that's what I was just explaining to him. I said, look, people who want to achieve results, they want to be pushed. And your manager wants to see you pushing for something, because he'll know that that's how you will. Obviously, there's always within reason, right? But at the end of the day, that is how you move forward, and that's often how you deliver some sort of results, right?
Yeah, exactly. I want the people that want to go above and beyond. I do a weekly update for the company where I talk about something that I'm thinking about, but often I just use that as a chance to re-emphasize what our purpose and mission and what our objectives are. But I was saying about hustle culture, basically. I don't think I think my view is that everyone in the company, the tasks that they have allocated to them for them to have done a good job, they should be able to do in the 9 to 5. And if they have more than that, then you run the risk of burnout and it gets stressful. Now, sometimes we will get the resource planning wrong and there'll be more tasks than there are people to do it. But if you only ever get it wrong one way, where there are never enough people for the tasks, then that's not right. So if you're saying, well, sometimes there'll be a variation, sometimes there'll be some time when you have a bit of extra resource and people can take their foot off the pedal and take it a bit easier. Sometimes you'll have to do the extra work. That's sort of acceptable. But generally, you should be able to do your work within the amount of time allocated. But I am looking for people that go above and beyond and want to do more. And in their spare time, they're thinking of ways that they can improve themselves or improve the job they're doing, or doing a bit of extra work that isn't essential for them to achieve their objectives for the quarter, but they want to do a bit extra. They want to achieve that. And the reason I don't think that results in burnout is I think actually primarily burnout is because you're fulfilling tasks that you don't have control over, that they're given to you, and you're not getting them all done, and it's really stressful. If you're on top of all of that and you're thinking, now I can turn my mind to something really interesting and do this extra thing, that's not a burnout thing. It's a fun thing. It's David, go back to the David Beckham example. If someone said, come on, David, you've kicked that ball enough, just take it easy, you're going to burn out. It's like, no, I'm loving it. This is what I want to do. I really, if I'm thinking about work on a Sunday morning in bed, it's not because, oh my God, it's so stressful, I've got to think about these work things. It's because I'm excited about work and I'm looking forward to getting into the office on Monday, or working from home as we are now more. We do have an office, but I'm not thinking, God, this is a real, this is really impinging on my personal life. This is what I want to do and I really enjoy it. So again, I want people like that. So the expectation isn't that they have to do it in order to be successful, but to be able to do their job and they get promoted. But the people that are real rising stars will probably be with people that put the extra yards in. But it's so hard. It's one of the nice things I think about people working remotely and from home is you can't have that performative kind of presenteeism thing of people saying, oh, well, I'm in the office till 9 o'clock every night.
Yeah.
They can't do that. They just have to do a really good job. So I think that's
actually a very interesting point. Yeah. That it's not about being there. It's just either you deliver the results or you don't, right?
Yeah. Well, I think the flip side for managers is managers find that quite hard, because what's really easy to control as a manager is you are sitting at your desk and from these hours, so you're probably working. But there's a guy called Glenn Elliott who founded a company called Reward Gateway, and he spoke at a number of my events, and he's become an investor in the Mothership. But he said, unless you think there's something magical about you staring at the back of someone's head, let them decide where and when they work, because they're best placed to do that effectively. And now, obviously, it's sort of been forced on us through the pandemic, and everyone's realised that they can trust people. But like, why the hell did you have all these people working for you didn't trust anyway? I mean, that's a mistake, but I can understand how you get there. But even the people that you didn't trust could be trusted, it turns out. And so that's great. Giving people the freedom to work out when and where they best do their work is really good. So morning people, if you want to wake up at 6 a.m. and do 3 hours work and then go to the gym and have a nap, totally fine by me. You've just got to get your work done. And that's I like to have a sleep in the afternoon. That's a perfect, recharge the batteries. Why sit there feeling drowsy and doing low quality work if you could sleep for 15 minutes and then be kind of completely refreshed and back into it? It's hard to do at the office.
It just feels like such a fundamental part about just how you function, right? Because I'm not a morning person. I hate morning meetings. And then there are people who hate evening meetings. I love evening meetings. I got so much energy at 10 p.m., I can change the world at 10 p.m., but I cannot do it at 8 a.m., So
it's a bit annoying if it's meetings, because if you're not a morning person and they're not an evening person, then when do you have the meeting?
For sure. But the point is that it's just such a fundamental part that we function differently, right? And you can really, if you want to do your best work, you do it when you are at your best, right? And that for somebody it's the morning, for somebody it's the evening. Some person needs to take a nap.
For most people, they're most productive in the few hours before lunch. So not when they've just woken up and they're blue, but that's your sort of peak. Generally, your peak performance is that sort of 10 till 12, 10 till 1. So you may find that's also a very good time for you, but then, I understand you may not want to have meetings at 6 a.m. either.
Yeah. Ben, I have probably 100 more questions, but I want to be respectful of your time, and I know you have an important call right after this, so we can start wrapping up, unless there's any other subject that you think that we skipped and we need to talk about.
There's just a million and one things. I mean, that's the trouble with running a business, and if you want it to be successful, is you can't just do one thing well. You've got to do 100 things well. It's the equity scheme, the way you hire people, how you communicate with them, how you develop them, how you just a million and one things, and you've got to do them all really well. Or
Yeah.
some people don't. You hit the right thing at the right time. People are great. Businesses grow really rapidly, even though they're doing everything really badly, and that's just the unfairness of it all. But generally, if you want to be a standout success, you've got to do a lot of things right all the time, and it's hard work.
Yeah. I'm not even, that's just another big subject that we could open. But we're going to wait for the next parts too. Maybe we can open some other subjects. But Ben, thank you so much. I really enjoyed the conversation. I got inspired by a lot of things that you said and a lot of things that you do. And I'm sure that other listeners will get inspired by that as well. So thanks a lot.
Well, Matthew, it's been great to join you as well. Thank you.
Thanks. Thanks for listening until the end. I hope you enjoyed it. If you like the content, please do me a favor and click the like button on YouTube or give us 5 stars on Spotify, Apple Podcasts, wherever it is that you listen to your podcasts. Leave a comment, subscribe if you want to hear more from us. That really helps also to get the podcast out there, and that helps me get more interesting guests and create even more interesting content. So I really appreciate if you do that. If you have any other comments, questions, feel free to message me. You can find me on Twitter. That's usually the best channel. The link should be somewhere in the description. And check out my Twitter. I try to tweet interesting stuff about similar content that we talk about on the podcast, key insights from the podcast as well, and just generally stuff that I learn and stuff that I do. So see you. Thanks.